Okay, now we will discuss depreciation T accounts. T accounts will be different for the straight line method and for the diminishing balance method. Let's discuss it. First, we will be discussing obviously straight line method. And if there is any confusion in this, please let me know now. Otherwise, it will going to trouble trouble you in the cash flow topic.
Okay.
In straight line method, there will always be two T accounts. One for the, let's suppose for the asset that would be at cost, and the other would be the disposal account. Sorry. Accumulated depreciation. Wait 3 minutes. After Adhan, I will resume. This data, when opening value obviously will come in the debit, and that is closing value will come here in the credit, and this will become the opening of the next year. Clear? Is there any issue in this?
No.
Okay. Now, obviously, if we purchase some asset, then asset account or machinery account is the common for all. So any additions to this asset or this machinery or this class of asset will go into this T account in the debit, because additions, that is purchase, is always added, debited. Similarly, if we dispose of any asset, then according to the entry when we dispose the asset, it will be credited. So any disposal of asset will be credited. But you remember, we just last see here that any disposal would be recorded at cost. That is, this one.
The total cost?
Yes, at the cost, not the book value. So this disposal should be recorded at cost, the asset which we had disposed of. Clear?
Yes.
Then now let's come to the accumulated depreciation amount. Obviously, if we see that accumulated depreciation is always credited, so its opening amount would be credit, and its closing amount, that is CD amount, would be in the debit side, so that for the next year or next reporting month, it would become into the credit side. Then,
Yes.
okay. Now, also you remember that when an asset is disposed of, its accumulated depreciation account is debited. So therefore, this is the accumulated depreciation account. So the asset which is disposed of. Now listen to this sentence very carefully. The asset which is disposed of, that disposed assets accumulated depreciation would be debited in the accumulated depreciation account. So here it is very pertinent to mention that accumulated depreciation of disposed asset. This is important. And this is also important in a straight line disposal it at cost. Clear? Now what about the Are you saying anything? Any issues?
No.
Okay. Now, what about the current year depreciation expense? This entry, the depreciation expense debit and accumulated depreciation is credited. So this accumulated depreciation account would be credited with the amount of depreciation expense. Clear?
Sir, could you go over that again?
This one?
Yeah, this one.
What is the entry of the depreciation expense? It's simple. Depreciation expense debit and accumulated depreciation credit. Since we are making the T account of accumulated depreciation, so it would be credited, and because of depreciation expense, we write here the counterpart. So it is we
Yeah.
have written as depreciation expense. Clear?
Yes, got it.
Then now for the perspective of cash flow statement, or just for the let's suppose for the depreciation questions, we have entered the opening value. Now we have seen if we have purchased any asset, we will write in the debit side, and if we have disposed any asset, we will write at the credit side at cost. Now if we add these two and less this two, this we will get the closing amount. Then
Yes.
similarly, we will put the opening and the closing values of accumulated depreciation. And if we have disposed any asset, if there is any disposal, its corresponding accumulated depreciation will come in this section, debit section. And when we calculate the depreciation expense for the year, we will enter it in the credit side, and we will add these two and subtract this. So we will get the closing of the accumulated depreciation. That
Yes.
now for another purpose, let's suppose if we have given opening and closing, we have entered these amounts and these amounts, and have we have to do some calculations, or we have to perform some percentages applied on something, and all the calculations anyways. And we found later that we have got the additions in the fixed asset side is, let's suppose, let's put an example for that. Let's suppose I have an asset account, and opening is $200 and closing is $500. Done. And in the question, we have given that additions to the fixed asset class is about $700. Now, according to the rule of T account, the debit side and the credit side should be equal. Is this equal?
No.
The difference?
It's the debit side is 300 greater than the credit side.
Sorry, debit side is 900 and 500 is 400 greater, isn't
Yeah.
it? So the
Yeah.
difference is what? 400 here.
Yes.
Now what we call it? Now we have
It's
found
the
this would be F.
when you bring it down to the next month, it will be the balance carried forward.
No, this would be the carry forward. This would be the carry forward because we have given the CD balance already.
Oh, yes.
So according to this format, we have put in the opening, we have put in the additions, we have put in the closing. Now the balancing amount would be for this disposal. So three is known, and one is unknown. So we had calculated that unknown from the T account perspective. Clear?
And it's always disposal.
If
Can it be something else?
no, if there is the remaining amount after that CD is given, if there is anything in the credit, in the straight line method, it would always be disposed. Clear?
Okay.
And
And what if the difference is on the debit side?
if it is on the debit side, let's suppose take your example like this, that we have given the balance of 1000 here, let's suppose, and we have still the deficiency of 300. So any further thing, any debit balance, further debit balance after that addition would be what? Further addition. These two will make the additions. Clear?
Yes.
And similarly, it would be applied here. If this, and this is known, the difference would be what? Of depreciation expense. And if this, and this is known, the difference would be what? Accumulated depreciation on disposal of asset. Done?
Yes, got it.
Got it? Now I am rubbing this and we will move towards the straight line, sorry, diminishing balance. In diminishing balance method, we have to make only one T account because here the value represents are at book value or WDV. Correct? So we would be having the opening and closing as we had discussed earlier. Done?
Yes.
And here it would be always debit the additions. Clear? And if we have given the disposals somehow after calculation of direct amount, now this disposal will not be at cost. This disposal will be always at book value or WDV. That is cost less accumulated depreciation. Clear?
Sir, why is it that?
Because it is WDV method. We are taking things at WDV. And WDV is what? Cost less accumulated depreciation.
No, but when you're disposing of any asset, plan
Yes.
asset, you have to dispose it at the cost. That's how we did the examples. So for this method, it's going to be at the book value?
Entry would be made at the cost, but T account would be made at the net amount in WDV. Clear?
And why is that? Why not just the cost?
You may say to differentiate two methods between the straight line and diminishing balance method. And the second is that the method itself is self represents that the values are represented at book value, and we cannot differentiate it at another thing. Just look at this again, that chart where it is for the diminishing balance method. It is here the cost every time changes. So how can we write cost? Which cost to be taken? 6,000, 3,600, 2,160. That's right. Clear?
Why not the initial cost?
But that is not the cost. It is cost is changing. And actually it is the WDV that is treated as the cost for the new asset. That's why. Getting this point?
Okay.
Or you may simply
Yes.
memorize it. Then
Yes.
okay. And other thing is that as usual, depreciation expense is credited. So here depreciation expense will also be credited. Now, if in WDV method, if the organization is following WDV method and we have given this, this and this. If the difference is here after disposal, it will be depreciation expense. And if the difference is here, it will always be the addition. And let's suppose we haven't given the disposal and difference is here. So first difference would be treated as for depreciation expense and then disposal. If depreciation expense is not given and the difference arises in the credit side, it would be treated as depreciation expense first. And if depreciation expense is given and the difference is in the credit side, then it would be treated as disposal. Clear this thing?
Yes. Also, what is the title of this T account? For which
Sorry?
account is it?
Sorry?
For which account
Uh,
is this T account?
for which account? It is asset account.
For example,
It is an asset
just
account. That asset
okay.
is represented at WDV. Clear?
Yes.
Okay. Now let me know, have you done that handouts question which I had given to you? You haven't done?
Yeah, I did those.
Done. Then why haven't you sent to me?
I was supposed to send.
Just to check how I know that you have got that answers correct.
Okay. Yes, I'll
And
send it
what
to
about
you.
Volta's truck? That question have you done?
Which question?
Volta's truck, I think. That's name Volta's truck.
Hmm.
Okay, we will do it in the tomorrow session. No issues. And we will prepare the T accounts as well so that you can understand the flow of these items. Clear?
Okay. Yes.
Okay. See you tomorrow. Allah Hafiz.